Hey guys, welcome back to Thoughtfully, or if you're new here, welcome. Before we start today's discussion, I do just want to state I'm not a legally licensed financial professional. This is not a financial recommendation or investment advice. This is just for informational and educational purposes. For today's episode, we are doing part 3 of the corporate earnings series, or if you're new here, just stopping by, we're going to do a case study of Tapestry for their Q1 fiscal year 2026 earnings. We're going to look through the presentations that they created for their earnings calls, and then we're also going to look through the 10Q. Let's get started. So to get started, we are on the Tapestry Investor Relations website. To find the investor presentation, I first went to, you can go to presentations and financial reports. This investor presentation will be the Q1 fiscal year 2026 investor presentation. We'll be using that. They do reference their investor day presentation that they gave back in September. So I do have that one open up as well. And then their 10Q, which you will find under the SEC filing section, and then you can press 10Q right there. Now we are going to get started with the investor presentation. Now we will get started with the investor presentation. I did review this beforehand, so I won't point out everything, but I'll point out things that I thought were interesting or not as I was reviewing this earlier. As I said earlier, Tapestry really is the parent company of Coach and Kate Spade. Previously, it did own Stuart Weitzman as well. However, they did sell Stuart Weitzman at the beginning of 2025, and then the sale went through in August, as we'll discuss later on. So here they're kind of stating what the purpose is behind their brand. So they're trying to say stretch and then what's possible. I do think both Coach and especially Kate Spade are very innovative. So that's kind of their thing of breaking boundaries and continuous innovation does seem to fit true with what the two brands are. Here they want to talk about their values, their vision as a company. So this is an overview of how the company did, or the current status of the company. And here they're laying out what their growth strategies are, kind of how they want to be building emotional connections with the consumers and kind of other strategies that they have in terms of growth. Here they're explaining what they think are their competitive advantages. Here this is kind of interesting. So they're saying attractive TAM. So you'll hear TAM a lot kind of in finance or in business too, when they're trying to say how much room the company has to grow. So TAM means total addressable market. So they're kind of went here from saying total population in the world is 8.2 billion. People who we think that fit our market or a target customer is 1.9 billion. And then the people that we think are just at the point of entry of entering our market is this 275 million. And here they do footnote, they think women 18 to 64 who are qualified, they say qualified females, we don't know what that means, but they're saying 18 to 64 are this global addressable population, and then market entry is females who are 18 and 27 years old. That age range I do think is appropriate. Attractive core categories. Here they're primarily noting footwear and bags and SLGs. As you see, bags and SLGs makes up the primary allocations that they want, and then footwear is kind of the remaining percentage of that. I do think it's interesting that they did not highlight apparel, as Coach and Kate Spade do make apparel, but I don't know, when you think about Coach or Kate Spade, you don't think about apparel, so I guess maybe that's the reason why they're not addressing apparel in this chart. I don't know if this means that they'll be paying less attention to apparel moving forward as they really try to shift towards bags, footwear, and SLGs. Here, it's a few charts that they have demonstrated. So they're saying category, as kind of mentioned before, so handbags is 56%, accessories, and this is global as a brand. Accessories 27%, footwear 6%, other 11%. Again, they did not really highlight apparel. I'm assuming it's in this 11%. So they are saying they have attractive and high margin categories, which basically saying they found a selling price where, considering their expenses, they're still able to have a lot of profit left over, and so they're it's higher margin good for them. This is interesting. They're saying resilient and durable demand given the emotional and functional needs these categories fulfill. Okay, so they're saying that not only people emotionally spending, which I do have to get better at, but just in general functional needs as well. People buy tote bags to go to work, but then people also buy tote bags because it looks pretty. Retail therapy is a thing, I guess they're saying. This last bullet point, I'm not really sure what the wording is. So it's global leader in core categories with permission to play and lifestyle. I don't know if this is just saying because they're creative brands, which they are. They're less restrictive, I think, in terms of being buttoned up versus some of the other handbag companies are. Here, you can really see how heavily skewed North America they are, but they are really trying to grow in the other areas of the world. They do later on state, I think it's in their analyst presentation or the Investor Day presentation, that for China, they actually do see like Wuhan being a city that could be important for them because they have looked to see kind of analysis of where their target population is. In Europe, I do think Europe's going to be an interesting market for them, just given like the European handbag companies that they have, but I am really interested to see how long-term Europe does play out for them. For channel, almost half the stores, 30% digital, which I am kind of curious about what the digital channel means for them. Like, is this like Instagram shopping or like shopping online, like, or e-commerce, or and then this is wholesale and other, because they even state here differentiated digital engagement capabilities. They do talk about how they're trying to use data to learn more about their consumer. I think this is not just them, it's a lot of other fashion companies with like consumer insights, just try to use data to get to know their customer and try to see like from the data what can they do to engage their customer. They do talk about the supply chain efforts and abilities. This is their management team. From here, I do want to talk about something. Okay, so from here, this is their Q1 highlights. They delivered record revenue of $1.7 billion, double-digit growth in North America, drove global sales growth of 16%. So Gen Z is really important for them as reading these documents. So they're saying they acquired not just Gen Z, but they acquired more than 2.2 million new customers globally, and Gen Z was a big driver in that increase. Earlier, when I was talking about margin and how they kind of stated that they have categories where they can have higher margins. So they're saying here they expanded operating margin by 200 basis points. So basis points, when you're trying to convert that to percentage, you kind of just take that basis point number, divide by 100. So here they're saying they increased that by 2%. And they're saying that this is because of operation improvements that they made, not like pricing or anything, but just in terms of operation improvements. I don't know if that's looking at ways in that they can become more efficient and lower cost, but there's something operationally let them experience this. And they achieved 1.38 in earnings per share, representing 35% growth versus last year. So earnings per share, or EPS, is you're going to take the net income number that you have for the year and you're going to divide that by the total shares outstanding. You can see this more in their 10Q, so we'll break this out later just to kind of verify it, but that's kind of EPS, or earnings per share, is. And then they returned to shareholders over $580 million. Again, I'm not recommending that you buy Tapestry. There's a lot more work that has to be done in this. I'm just kind of going over what they're telling their investors or the analyst community. And so there's $580 million. What I'm curious to know is like whether this was through, and we do find out whether this is through dividends, stock repurchases, or stock buybacks, which is a stock repurchase or buyback is when the company will actually buy some of the shares outstanding that we talked about with EPS, and they'll reduce the number of shares outstanding by buying back the company at a certain price. This can be controversial, as some people think this just raises the stock price of that company, and is not the most efficient way of returning shareholder value. Others, in terms of like they could have just given out more dividends, or they could have reinvested in the business in terms of like research and development. That's in a nutshell what stock repurchase programs are, or like stock buybacks in a very high level way. So this is the revenue trends by geography. You have North America, where they have revenue accelerate, led by a 26% growth in Coach. Coach has really been a hot brand in terms of handbags. Europe is continuing to grow with strength across all channels, and then the growth is also driven by increased local consumer spend and strong new consumer acquisition. If you listen to my podcast episodes, in the first one I recapped the earnings of LVMH and a few other fashion companies, and it's interesting, they're all kind of talking about how local consumer spend has been versus tourism spending, and Tapestry is again saying here that growth in the region was driven by local consumer spend. In China, they are experiencing growth ahead of their expectations. In Japan, they're seeing sales decline, which they were expecting, and this is something that also LVMH talked upon, where I guess now where the Japanese yen has kind of like increased in value, they're kind of seeing it's challenging backdrop for consumers compared to last year. So Tapestry is not the only one who has, I guess, kind of struggled in Japan. It's been some of the other fashion companies as well, and I do talk about that in my podcast episodes where I cover LVMH and a few others. So here they're kind of saying that they're doing really well, and they are raising their full year outlook that they previously stated because they feel like they're doing so well. For Coach, again, they said double-digit growth for America. North America. Coach experienced 1.7 million new customers globally, again led by Gen Z. It kind of mentioned outperformance in the Tabby, New York, and Terry families, as well as the Kislock bag remaining to be a highly viral success. This Tabby bag, at least for me, like when I think about Coach, I think of the Tabby collection. Like you have the classic Tabby, like here, which this new green that they have for this season is really, really nice. But then you also have like the quilted Tabbies, which yes, they do look like the Chanel Classic Flap. However, for some people who feel as though the Chanel Classic Flap is not worth, or granted the price, we're not saying a Coach bag has the same sentimental value as a Chanel bag, as a Chanel bag is a classic. However, $6,000 for a bag is very expensive compared to, I think the 20-inch is less than 400. Okay, so I pulled it up. As I was saying, this new green bag, the color is stunning. But then there she is. This is like $6,000 almost. I think now it could be a different price for Chanel, but for bag shape very similar for $395, and itself is very popular. I do think Coach did make a success with this one. They're also saying they grew double digits in footwear, primarily in sneakers. And so for Kate Spade, one of the things I did want to talk about here, they are trying to, I guess, have a more focused strategy, and they are actually trying to reduce handbag style count by 40%. And I do think of Kate Spade, I do think of a lot of styles for their handbags. I do like their handbags and SLGs, but to their point, they do just have a lot of styles. So I think not only will this help them lower down costs, it'll also help consumers try to pick out what pieces from Kate Spade they truly want and not really get lost either. All right, so earlier we talked about their 580 million, I believe that was the number, for returning to shareholders. So they're saying here how they kind of want to allocate capital is through reinvesting in brands and business, return capital via dividends. So they kind of want to return some of that 580 million as dividend, share repurchase program. So they are trying to do some stock buybacks, but then they're also trying to do some portfolio management strategically. So it does look like they authorized 1 billion in common stock to be repurchased for fiscal year 2026. So they actually increased this from the original outlook of 800 million, again reflecting that they did well Q1. During Q1, they did spend 500 million by repurchasing 4.7 million shares of common stock, so at an average price of $106 per share. In addition to this 500 million that they did buy back during Q1, it also does look like they gave out dividends. So they do continue to anticipate an annual dividend of $1.60 or 200 million for the full fiscal year. It does look like on their 10Q they gave about 80 million in dividends, so that's where that 580 million number worked out to. So they spent 500 of that for buying back stock, and then the other remaining for buying dividends or giving dividends to shareholders. Just to explain dividends real quick for anyone who kind of is unaware. So with dividend, again, I'm not recommending you buy the stock or anything like that. I'm just saying, so like with dividends, they're saying for this full year, if someone owns the stock for a full year, and let's just say they just own one share, they would get $1.60 from Tapestry, just as saying this is yours for owning the stock. If they had two, they would get 160 times 2. Dividends are a lot more complicated as you have to pay taxes on them since your income and a lot of other things, and I don't want to get into that, but I just want to explain what dividends are. Here's that green bag. I don't want to go further into the individual brands, but in the analyst presentation they did go further into Coach, and they did go further into Kate Spade, and then they just talked about corporate responsibility here. I do really wonder if Coachtopia was part of the reason why they kind of like blew up with Gen Z. I mean, I'm not really sure, but I do feel like they also are very aware of their brand on social media. But I do feel as though I do see Coachtopia a lot, so I'm not sure if that contributed any to it. Please comment below, correct me if I'm wrong. I probably am. All right, so that's the and then lastly you'll see like the financial statements that they put together for the presentation. So that's the analyst presentation that they made for the earnings call. Now I briefly did want to talk about the Investors Day presentation, as I believe there's something in it. I'm forgetting right now. There was something that I did want to talk about further. Okay, so in the analyst presentation that they made for this past quarter, so Q1 fiscal year 2026, they talked about total addressable market in terms of the number of people that they felt as though they could reach. Here in this Investor Day presentation, they also do talk about the actual potential monetary value of the market. market. So they're saying like the personal premium goods market in general, they think it's up to $335 billion. For handbags, SLGs, footwear, and apparel, they're saying $200 billion. When you narrow that down just to handbags, SLGs, and footwear, that's $100 billion. And then they think for Tapestry, full year 2025, they did about $7 billion. So they're trying to see that they have like out of the $100 billion, they're at $7 billion, but they could grow. So they're saying here, out of that 275 million like entry market person that they think that they could reach, they're at about 0.6% share. So here they're doing TAM globally, so segmented into like different regions. So you have North America, Europe, Middle East, and then Greater China. They also put down Gen Z, which again I do think they do actually even talk about later on in this presentation, like, oh, why? Like, if you're focusing just on Gen Z, are you missing something? But I do think, to their point, maybe they're trying to capture an audience while they're young so that they can have a longer journey with them throughout their life. Okay, so this is also about earlier. So this is like, they did a deep dive in terms of like China and like wanted to do a Gen Z city focus of, they chose Wuhan. And so they're just saying like what the addressable market is, what the population is. So they did identify students in university and then kind of specifically what their opportunity was, which is to expand Coach's footprint. Again, it's interesting that it's Coach, not Kate Spade. You do see in the financial statements when we do talk about the 10Q, kind of just how much bigger Coach is versus Kate Spade. Like there's a huge gap between like Coach and Kate Spade. And so I don't know why they found here the opportunities to expand Coach's footprint versus the opportunity to expand Coach and Kate Spade. And then later on, they just went through Coach and then Kate Spade. While I do think the Investor Day presentation was interesting to look at, I am going to transition into looking into the 10Q, just as during part 1 of the series and part 2 of the series, I do talk about like the 10Q and the 10K. So I just kind of wanted to show you what they look like, although I must confess to you, and I feel bad for saying this, a lot of times when companies do announce their earnings, I will just default to looking at the presentation, the analyst presentation that they put out for the earnings call. I won't read through the 10Q, but I will show you the 10Q. And then actually, I was doing some research this week. It does look like some companies. So the analyst presentation, it's a supplemental document. They don't have to do it. Again, the 10Q and the 10K is required to be filed with the SEC. This is just them trying to present something when they're talking to their analysts or their investors. And I did experience some companies when I was reviewing stuff this week where their analyst presentations weren't as detailed as the 10Q, or they just didn't have an analyst presentation, but they did have their 10Q out. So that's just to say that analyst presentations do vary by company. Again, the 10Q and the 10K is what's like legally required to be submitted. So transitioning to the 10Q, you'll see here Tapestry, that's the parent name. They're incorporated in Maryland. This is their address, their phone number, their stocks ticker, and then it's been a couple years since I studied accounting fully, and I won't go into these fully as I feel as though someone who studied accounting more could do more justice. But this is their balance sheet. This is their consolidated statement of operations. And I do forward this when I talk about, so how we were talking about earnings per share earlier in the presentation, how they got this 1.38, and I'll have a calculator up just so you can see how they do it. But they took this net income figure here of 274.8 million and divided that by the number of shares outstanding. Here to get the 1.32, they use this 207.6 number, and you get 1.32, blah blah blah. And then if they're talking about like other additional shares that were included in the calculation, they got this 1.28 number per share, which is again this 274.8 divided by now the 215.5, and that's the 1.275 or 1.28 rounded. This is their income statement, or consolidated income statement, their consolidated cash flow statement, and then they'll like add additional commentary off of different financial statements that there are, and just in general they add different commentary as they can. So here they have revenue broken down by direct to consumer and then wholesale. Here's their sales, disaggregated net sales. So this is their net sales based out by company and then also by region. So they are showing Stuart Weitzman here. I believe they entered the agreement to sell Stuart Weitzman in February 2025, but the deal did not go through until August 4th. So they're showing here their fiscal year 2025 ended June 28, 2025. So from July 1 through August 4th, that's what they're showing for Stuart Weitzman on their financial statements. in terms of the income and then also the expenses. And yep, it's showing here. So the deal, they went into the agreement to sell Stuart Weitzman on February 16, 2025. So some more financial statement, stockholders' equity. So here they're talking about their 2026 stock repurchase program, which is what we talked about in terms of early in the investment presentation. So on September 10, 2025, the board authorized the company to repurchase up to $3 billion of its outstanding common stock. And then during Q1 2026, they repurchased $500 million. So broken out, that was $238.3 million under a prior 2022 repurchase program, and then $261.7 million under this new 2026 share repurchase program. And they're saying they still have $2.74 billion remaining authorized to repurchase more stock. So this is kind of like a reconciliation of their stockholders' equity. And here, this is where it's showing that for Q1 2026, sorry. So Q1 25 is actually above here, and this is Q1 2026. They gave out 83.3 in dividends. Last Q1 2025, they gave 81.4 out, so they did give more back to shareholders this year. Just more financial statements. Here's just how you can see the earnings per share number broken out again. This is kind of showing what debt the company has. So in terms of current debt, so that's debt a year or less. They have 2 outstanding liabilities. So in terms of long-term debt, so companies can not only issue stock, but they can also issue debt. And so it just look like here, they have notes expiring earliest in 2027 and then latest in 2035. And then below, they're giving more commentary about their debts. Here they're talking about their segment information, which is Coach and Kate Spade. This is their financial statements broken down into Coach, Kate Spade, and again, since they have Stuart Weitzman from July 1 through August 4th, they're showing Stuart Weitzman net sales and cost of sales. So cost of sales are like the expenses related to the products that were sold, or your good old cost of goods sold, COGS. That's how I remember them. SG&A, which is your selling, general, administrative expenses. So that can be like marketing. That can be salaries for people. They did talk about marketing in their presentations, which I forgot. I think it's actually in the investment presentation for Kate Spade, where they were saying that they wanted to increase marketing for Kate Spade. But in general, just here, it's just really interesting to see like how much bigger Coach is versus Kate Spade. I think that was the main takeaway that I had from this, looking at this. All right, so then now you have your management discussion analysis section, or you'll hear people talk about MD&A, and this is kind of where they just talk about different commentary about what they're seeing in the market, what their headwinds were, kind of what risks they're seeing, but just in general, like how they feel about the current environment. The 2 reportable segments are Coach and Kate Spade. This is their 2028 growth strategy. So they're saying about like 2028, we want to experience growth by this way. And so they're saying there are 4 key pillars, which is building emotional connections with consumers, fueling fashion innovation and product excellence, delivering compelling experiences to drive global growth, and ignite power of our people. They're talking more about the sale of Stuart Weitzman. Now they're talking about global economic conditions and industry trends. So this first point is something that I also talked about previously in my podcast with the fashion companies. They're seeing currency volatility, geopolitical instability, and political uncertainty. It does look as though currency is impacting companies right now in terms of their net income earnings. So I do kind of do more like research into what specifically with currency is impacting consumers, because it does look like not only is it driving consumers from like traveling abroad to like purchase items, like they're deciding to buy them locally, but like what else within currency is driving this. During the second half of fiscal 2025, the U.S. announced tariffs on imports from select countries. So they're talking about here the tariffs that were introduced by President Trump. And it does look like they're saying here, because of the tariffs that were announced, they are not expecting. So during first quarter of fiscal 2026, gross margin was negatively impacted by approximately 70 basis points. So that's 0.7%, I guess, or 70 basis points. And they're also saying during Q1 fiscal 2026, the macroeconomic environment remained challenging and volatile. So again, just like the MD&A section, it's really good just to kind of read about what the companies themselves think are like current headwinds or tailwinds. I kind of get them confused about which one do you say when there are in the marketplace, and kind of just how they're responding to them, or just more general commentary than just like, oh, we had our earnings and we made $7 billion in gross sales. Then this is when they get into like GAAP versus non-GAAP. GAAP is general accounting. I believe it's general acceptable accounting practices versus non-GAAP. I was just reading this currency section to see if they talked about more about kind of what was going on. As a side quest, I do want to go into currency impacting these companies. I hope as just like a high level, because there is more pages to the 10Q, just helpful for you to look and see what a 10Q is, kind of what presentations there are for analysts. There are more pages to this 10Q, but I just wanted to walk through it briefly, just kind of show you what a 10Q does look like. And so I'm going to close my laptop here. In addition to the PDF presentations that we looked through and the 10Qs, another thing that I will look at for companies, this is what I primarily do, there's this, and I'm not sponsored by this company, there's this company that has an app called Quarter, and Quarter is a really cool app. It's an app that I really love, and this is me as a nerd speaking here, where I have the Tapestry section up, where they actually have the earnings call. Because a lot of times when you go to the investor relations website of the companies, they'll send a link, they'll have a link for a webcast, but like you need credentials, like you're an analyst credentials to get to the webcast, so a lot of times I can't really listen to the calls. Some companies do post transcripts of the calls. Some companies themselves, like LVMH and MS, they will have like the video presentation of the calls themselves, but for people who can't have access to that, Quarter lets you listen to the investment calls of not just like earnings calls, but also like investor day presentations, and they will also have the transcript here, and so you can like read the transcript as you're listening to the call. So on the earnings calls, you typically have your CEO of the company, but then you also have like your CFO. And so the first portion is prepared remarks, where they talk about like kind of how they did that quarter or the annual, and then kind of any other things that they want to talk about. But then later on is like a Q&A portion where analysts from investment banks will kind of like ask them questions to further elaborate on things that they said during the prepared remarks. So you see here, their global head of investor relations is also on the call. So, and then you have like the CEO talking, and then like CFO talking, and then later on you'll also see like it does look like the coach CEO was also on the call. Me as a total nerd speaking, I love the Quarter app. Again, I'm not sponsored by them. So we're just wrapping up this corporate earnings series. I hope you learn more about what public companies are, kind of what earnings season is, how you can learn more about public companies through the 10Q and 10K, and through now these analyst presentations and the earnings calls. I am really curious about what you thought about the series. Write down the comments below, kind of what your thoughts are, if there's anything else I should further elaborate on in the future. Bye!